Welcome to this comprehensive guide on luxury asset investing. Today, we're exploring an exciting alternative investment category that includes classic cars, fine art, and high-end collectibles. These tangible assets have gained popularity among investors seeking diversification beyond traditional stocks and bonds. Throughout this presentation, you'll learn about the unique characteristics of luxury assets, understand their financial implications, and discover what it takes to successfully invest in these prestigious items. Whether you're curious about vintage automobiles, museum-quality paintings, or rare timepieces, this guide will provide you with the foundational knowledge needed to make informed investment decisions in the luxury asset market. Luxury assets represent a category of high-value tangible investments that combine both aesthetic appeal and potential financial returns. Classic cars include vintage and rare vehicles that appreciate over time due to their historical significance, rarity, and condition. These can range from 1950s sports cars to limited production supercars. Fine art encompasses paintings, sculptures, and limited edition works created by established or emerging artists whose reputations drive value. Finally, collectibles include luxury watches from prestigious brands, fine jewelry, rare coins, stamps, and other unique items that hold investment value. What makes these luxury assets is their combination of scarcity, craftsmanship, brand heritage, and the passion they inspire in collectors worldwide. Unlike financial securities, these are physical items you can own, display, and enjoy while potentially building wealth. Investors are drawn to luxury assets for several compelling reasons. First, portfolio diversification is crucial for managing risk. Luxury assets typically have low correlation with traditional financial markets, meaning when stocks decline, your art collection or classic car might maintain or even increase in value. Second, these assets serve as an effective inflation hedge. During periods of economic uncertainty and rising prices, tangible assets often appreciate because their intrinsic value and scarcity become more attractive. Third, luxury assets offer a unique combination of passion and profit. Unlike buying shares in a company, investing in a rare painting or vintage Ferrari allows you to personally enjoy and experience your investment while it potentially appreciates. This emotional connection can make the investment journey more fulfilling, even if the financial returns take time to materialize. Classic car investing requires careful consideration of multiple factors. Rarity and provenance matter most when determining a vehicle's investment potential. Limited production numbers, historical significance, and documented ownership history can dramatically impact value. A Ferrari once owned by a celebrity will command a premium over an identical model with standard ownership. Condition drives value significantly as well. Original parts, matching numbers, and professional restoration work are essential. However, investors must understand the financial implications. High storage costs for climate-controlled garages, regular maintenance to keep vehicles in running condition, and substantial insurance premiums can consume significant capital. Additionally, the classic car market is relatively illiquid with high transaction costs. Auction houses typically charge both buyer and seller premiums, sometimes totaling 20 to 30% of the transaction value. These factors must be carefully weighed against potential appreciation. The fine art market operates differently from traditional investments and requires specialized knowledge. Artist reputation is the primary driver of pricing. Established artists with strong auction records and museum exhibitions command premium prices, while emerging artists offer higher risk but potentially greater returns. Authentication is absolutely critical because forgeries can render an investment worthless. Working with reputable galleries, obtaining certificates of authenticity, and using expert appraisers is essential. Auction houses like Sotheby's and Christie's take substantial commissions, often 15 to 25% from both buyers and sellers. From a cost perspective, fine art demands climate-controlled storage to prevent deterioration from humidity, temperature fluctuations, and light exposure. Insurance premiums for valuable pieces can be expensive, and regular expert appraisals are needed to maintain proper coverage and track value. Despite these challenges, fine art has historically provided strong returns for knowledgeable investors. Collectibles represent a diverse investment category with varying characteristics. Popular categories include luxury watches from brands like Rolex, Patek Philippe, and Audemars Piguet, which often appreciate due to limited production and strong brand heritage. Fine jewelry and gemstones offer intrinsic value from precious metals and stones, plus craftsmanship premiums. Rare coins and stamps attract dedicated collector communities that support stable markets. Several factors drive investment value in collectibles. Limited production creates scarcity, which is fundamental to appreciation. When a watchmaker produces only a few hundred pieces of a particular model, demand naturally exceeds supply over time. Brand heritage matters significantly because established luxury houses have decades or centuries of reputation supporting their products. Condition and originality are essential. A watch with all original parts, original box, and papers commands multiples of the price of the same model that's been modified or lacks documentation. Collectors demand authenticity and completeness. Understanding the risks is crucial before committing capital to luxury assets. Liquidity risk is perhaps the most significant challenge. Unlike stocks that can be sold within seconds, luxury assets may take months or even years to find qualified buyers willing to pay fair market value. In urgent situations, sellers often accept substantial discounts, sometimes 20 to 40% below appraised values. Market volatility affects luxury assets differently than financial securities. Values can fluctuate dramatically based on changing tastes, trends, and collector demand. An artist who's highly sought after today might fall out of favor in 5 years. Classic car values can swing wildly based on generational preferences, as younger collectors have different tastes than older ones. High ongoing costs represent a persistent drain on returns. Between storage, insurance, maintenance, and periodic professional appraisals, annual carrying costs can easily reach 2 to 5% of an asset's value, significantly impacting overall investment returns. Tax treatment of luxury assets differs significantly from traditional investments and can substantially impact net returns. Capital gains treatment for collectibles is generally less favorable than for stocks and bonds. In the United States, collectibles are taxed at a maximum federal rate of 28%, compared to the lower long-term capital gains rates of 15 or 20% that apply to securities held over 1 year. This higher rate applies to gains from selling art, classic cars, precious metals, gems, stamps, coins, and most other collectibles. State taxes may also apply depending on jurisdiction, potentially adding another 5 to 10%. Additional tax considerations include estate tax implications. High-value collections can create significant estate tax burdens for heirs, requiring careful planning and potentially forcing sales to pay taxes. Import duties on international purchases can add substantial upfront costs. Sales tax varies by jurisdiction, but can reach 8 to 10% in some locations, immediately reducing the effective purchase price for investment purposes. Success in luxury asset investing requires disciplined practices and expert guidance. First, doing thorough research is non-negotiable. Work with reputable dealers, auction houses, and independent experts who can verify authenticity, assess condition, and provide market insights. Attend auctions, join collector communities, and study price trends over multiple years to understand market dynamics. Never rush into purchases based on emotion alone. Second, set clear investment goals before committing capital. Define your time horizon, whether it's 5, 10, or 20 years. Establish realistic return expectations, understanding that luxury assets may underperform stocks over short periods but potentially outperform over decades. Assess your risk tolerance honestly, because luxury assets can experience significant value fluctuations. Third, diversify within your chosen category. If investing in art, consider multiple artists, time periods, and styles. For classic cars, diversify across different manufacturers, eras, and vehicle types. This reduces the impact of any single item underperforming. Let's review the essential points about luxury asset investing. First, luxury assets offer valuable diversification benefits for investment portfolios, but they require significant capital and specialized expertise. These are not investments for beginners or those with limited resources. Success demands substantial upfront capital, ongoing financial commitment, and deep knowledge of specific markets. Second, ongoing costs can significantly impact overall returns. Between storage, insurance, maintenance, and transaction fees, annual expenses can easily consume 2 to 5% of asset value. These costs must be factored into return calculations and can turn seemingly attractive appreciation into mediocre net performance. Third, these are fundamentally long-term investments with limited liquidity. Plan to hold luxury assets for at least 5 to 10 years and understand that selling quickly usually means accepting substantial discounts. Finally, success requires deep knowledge and expert guidance. Partner with reputable dealers, auction houses, and advisors who can help navigate authentication, valuation, and market timing. Luxury asset investing can be rewarding, but only for those who approach it with proper preparation and realistic expectations.
If you like this video, hit that like button and don't forget to subscribe. Visit CodeLucky.com for more such useful content.